Good morning, traders. There's the opening bell. And welcome to the Pirate Traders live stream for Tuesday, June 13th. My name is Charles. Let's get started. All right, so the market has had excess. I will talk more about that in a moment, but just to keep it very simple, since the opening bell just rang, as long as this excess continues, it will continue. But when it is over, we have a lot of weakness that needs to be backfilled. The first of that, the first weakness that we have is the gap that we just created this morning down to yesterday's high. So that is between the current price at 44.04 and yesterday's high at 43.89. So we are first order of business looking for the market to pull back down and try to fill that gap. If for whatever reason it cannot get down and fill that gap, if it finds support here around 4,400, if it finds support down here around 39.96, or it finds support just above, filling that gap around 43.91, if it finds support in any of those areas and turns around and heads higher, that is what we call a gap and go, which would be the most bullish signal, and we would expect that momentum to continue. At the very least, to head up and test the overnight high at 44.15. But if they get down to yesterday's high at 43.89, then we find out, do they find support there? Support at the high would be also a gap and go, which would be bullish, but failure to find support at the high and pulling back down into yesterday's range would tell us that that momentum is coming to an end, right? So right now at this moment, the market is saying we have momentum to the upside. But if it gets down to yesterday's high and then it starts to spend time and bring in volume inside yesterday's range, well, then it's telling us that momentum is over. But if it finds support anywhere above, they can just keep it going. It will shock you how far they could push it. Now, so that's the momentum, and that's what we're paying attention to right now at this moment, which is the gap for this morning. Now let's just zoom out a little bit and get some perspective. This move has been gargantuan. As a matter of fact, let's look at it on the daily. So we were in this bear market. Then we were in this balancing sort of neutral market. We finally broke out of that. And what are we doing? We're getting massive excess, right? All this balance, all this pent up frustration from weeks and weeks, months actually, months and months, 3 months of just sideways chop, just pulling and pulling and pulling, tightening that rubber band up. Well, that rubber band broke to the upside and we're getting that slingshot move, okay? But once this momentum is over, it's got to pull back down and balance. So there's two ways that a market can balance off excess like this. One way would be to just rotate around at higher prices and spend enough time to get new buyers and continue higher. The other would be to pull back with price, looking for support based on price. The more overextended that the market gets itself in terms of momentum, the more and more days that we have a gap up and a spike at the end of the day and another gap, the more it increases the odds that they have to use price to pull back and balance off this momentum rather than use time. Okay, they just can't get themselves too overextended before eventually they need to pull back. So I'm paying very close attention to yesterday's high. That to me is the ultimate area where the momentum will die. So if they come back down here and they start to pull into yesterday's range, bigger picture, that to me is the end of the momentum up here on the daily, right? And so we're probably going to need to have a pretty big pullback at some point here because we've gotten so overextended. But as long as they keep the momentum going, I won't fight it. So if they keep the momentum of this gap and go, I'll be fine with heading up to test the overnight high. If they can find new buyers there, I'll be fine with the momentum continuing. And then the very last elephant in the room we got to talk about is the FOMC meeting tomorrow. Man, we have a gap and go. This is momentum. Plain and simple. I would love to change a banner, but we've only had 24 likes. If you have not yet smashed that thumbs up button, please do. The last and final thing we've talked about is the FOMC meeting tomorrow. Obviously, a lot of traders have been lulled into the belief that we cannot have volatility prior to an FOMC meeting. And the way markets work, it is just inevitable that they cannot do the same thing again and again forever. So if too many people positioned themselves for the market to go sideways over the last few days, what does the market have to do? It has to break one direction very, very hard and squeeze half of them. So that's what we're witnessing here. I think if they can keep the momentum going till the end of today, likely when the FOMC happens tomorrow, we'll get a large pullback. But if not, whenever the momentum ends today, look for that pullback. Good morning to Nap, Darth Liquidity, Felipe, Gino, ES Trade Monkey, Chris, chillin' with Dylan, Infornity, Pavel, Tim J. Waffles. Jay says, another day in paradise. I couldn't agree more. Spike up, gap and go. Get after it. I also thought it was worth mentioning, I talked about this at the end of the day yesterday, but if you look back at the daily here, if you wonder how is it that we're making these moves so quickly, we're just entering previous balance. So when we broke out of this range that we were in down here, we had to come back to test this previous balance area up here. Boop, did that. When we broke out of that, what's the next one? Up here. We got back up to that, and now we are beginning to pass back up into that balance area. So I don't think this could happen, but technically if we have another leg of momentum to the upside, the end of that balance area would be around 44.50. But I don't think we're heading up there, not yet. Worth noting. That would also, because that balance area low that I'm talking about, because that is also right where yesterday's high was, that is even further reason to really consider that an important deal or no deal level. Because both intraday today, it would be a sign the momentum to the upside is over if we pulled back below there. But also it would be a look into and fail of that previous balance. So again, just putting more emphasis on the importance of support at yesterday's high if they want to keep the momentum going. Man, straight to the overnight high. It's a bull market, you know. Spike up leads to a gap up, leads to a gap and go. Good morning, $6 Million Man, RK, Mike, who thinks Philip, John, Frito, and Umt. Good to see you. Welcome. Garrich is back. Did you sign up, Garrich, or are you doing the free week first? Garrett says, can you give me a couple of signing ups? Not really sure what that means. $50% off a $10 a month membership? Sorry, dude. No can do. If $10 is breaking the bank, this is the wrong business. Damn, there you go. All right, tested the overnight high. This is a gap and go. They have the momentum. That is bullish to see. So now the question is, can they hold it? Can they turn this into support now? 44.15 for continuation higher from here. Next major resistance is 44.25 and then 44.28. Can they hold it? I feel I'm going to regret this banner today. regret putting myself in this position. 92 people hanging out, 49 likes. Smash that thumbs up if you wouldn't mind. I sure would appreciate it. Garrett says, I liked your stream 5 times from 5 different accounts. If you send me a screen grab, you email me a screen grab of your 5 different accounts liking it, I'll give you a 50% off coupon. All right, here we go. Testing this overnight high. So they worked really, really hard to get up here. Are there more buyers willing to do business up here? Can they hold the support? Oh no, I've created a monster. Oh no. Now Frito wants his dollar. All right, so that's no support at the overnight high. Less bullish to see. So the next potential support is the halfback right here at 44.11. Then this node of volume at 44.06. And then finally the opening price at 44.02. At this point, they could find support at any of those and turn around and head right back up. If they pass back through the opening price again, though, if they pass back through 44.02 and they continue lower, then it will be a gap fill once again, and they'll be looking to get back down to yesterday's high. But now that they got up to the overnight high, they have told us they are bullish. They have told us that the bulls are in charge. So really the question is just, where do those bulls step in? Where do they take the reins? So we are looking for support. Garrett says, ES is tanking now. Better be short. No, I don't generally like to look at it like that. Generally, when it's tanking, I'm looking for a place to get long. I'm saying, okay, I understand what's happening. I understand that we're liquidating. But I know the people who are selling in the liquidation are those that are panic selling. They were the buyers that bought the high. But there's a chance for stronger hand buyers to step in here. Now, I won't know where. I don't know where they're going to step in. But once they do, well, I can trust those strong hands. So I'd rather be a buyer joining them than be joining the panic sellers and never knowing how far they can push it. Speaking of which, last chance for support here. They got to stay above the open price to keep the momentum. Can they hold it? Yep, NQ filling its gap right now. So you are looking for support at 14,990 for a gap and go. If they start to pull back down into yesterday's range, that becomes bearish. Yes, still on that sweet, sweet gap and go, Jubes, right now. Still having those buyers. Step on in. Garrett said, so do you think the ES will fill the gap today? Do I think it will? I don't know. Right now, I do not think it will. If it passes back through that opening price, if it goes through 44.02, then I will think it will. I always just go with whatever the market is telling me at the moment rather than try to predict the future. Right now, it's a gap and go. Right now, we've got support. Right now, they're defending. So right now, I think they're going to keep going as long as they can. If they pass back through that open, then I will change my mind. But I will not assume that to happen now ahead of time, because what I have found is I will be wrong more often when I guess, and I will be correct more often if I just go by what's actually happening. Fausto, what up? Fausto, well, why are you Fausto 412? Were there 411 other Faustos that took all the spot? Well, good to see you. Nor Auto Trading says you will need to sign up for data with one of the approved providers. Bar Chart IQ. What do you recommend? I used Bar Chart for a while. It was the cheaper option. It was like $100 a month. But it messed up a few times. There were a few times where like I went to log in the morning and it wasn't working and I had to reach out to their tech support to get it like working. And after it happened twice, I was like, I'm done with this. So I switched to IQ Feed. That's what I use now. It's a little more expensive. It's like $200 a month, but I've never had a problem. 777 in the house. Good to see you. All right, Fausto. Thanks for stopping by. I know Fausto smashed that thumbs up. Did you? One Punch Panda says, wanted to ask if IQ Feed can support the continuous contract. Yes. And that's the one I use. This one here is the continuous. And the reason I like this one, it's different than the one that they use here on TradingView. You can see where the gap was on TradingView was actually a couple of days before the rollover. So I don't know how they calculate the continuous contract on here, but the way that IQ Feed does it is it literally just on the rollover day, it switches from one to the next, but it doesn't change any of the back data. And that's what I found to be the most effective. All right, testing the support once again. So now that momentum is starting to wean, right? We got all these buyers right from the open, pushed us up above the overnight high. We pulled back down, gave those buyers a chance to step back in and defend. They gave it another push, but this time around, they couldn't get back above that overnight high. So that means we likely don't have enough buyers yet. We may have to pull back down to the opening price here, around 44.02, looking for buyers there. And that is the last stronghold for those gap and go momentum buyers. All right. Support for the third time. So once again, can they get back up through the halfback? Can they get up to that overnight high? Ooh, poor low on the Q. Increasing the odds. They need to fill that gap to 14,990. All right, so the more time that we spend chopping up right now between the halfback here at 44.11 and the opening price down here. Okay, so the more time we spend chopping inside this box, the stronger and stronger we're creating that momentum, because half of these traders are going to end up wrong, right? These are short-term participants who are looking for the market to either continue higher or head down and fill the gap. So those shorting, if the market starts to work its way back through the halfback, will get squeezed, and then the market will move higher. And those buying for support, if the market pulls back through the opening price, will begin to get squeezed as the market liquidates lower. So in the middle here, they're just winding up that spring tighter and tighter, getting more and more people long and more people short, so that whenever it breaks one way or another, there's more momentum for that move. We got 103 people hanging out. Boo, 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 boo. Please smash that like button. See if we can get a few more. Okay, so here's that halfback. So now if these sellers looking for a gap, well, there you go. As we pass through it, these sellers that were looking for a gap fill, they're going to begin to get squeezed. And then the market's going to start making little pops higher as they begin to cover those shorts. Okay, so no short covering. One tiny little bit of short covering, but not much there. So what does that mean? The winding continues. All right, here we go. Opening price. Can they hold it? And the spring gets tighter. Just tighter and tighter and tighter. All right. I am no longer bullish. Now looking for that gap fill. All that tightening, all that squeezing and chopping will have brought in a lot of buyers who will now need to liquidate, giving the market momentum down. And then new gap fill sellers will join that party. So in my mind, that increases the odds. We need to at least try to fill the gap. Let's take a look at the NQ's gap. Oh, NQ just filled their gap. So now the question becomes, can they find support right here at yesterday's high, where the market currently is? Or do they start to pull back down into yesterday's range? Do they start to spend more and more time and bring in more and more volume down here inside yesterday's range? If they do, that will increase the odds. We're heading back to start repairing the weakness we left behind on Friday. Or sorry, on yesterday. Chris says, does short covering mean the sellers buy back the loss and win positions or only wins? Short covering just means they have to get out of shorts, meaning they are currently holding a short contract and they want to get flat. The only way to do that is to sell that to somebody who's willing to buy it. So it's kind of the same thing as going long, but it's not the same thing because at the end you're flat instead of holding a contract. So we call it short covering. So now what we're experiencing is the opposite of that, right? Shorts covering would have been if the market pushed above halfback and kept going, but instead it's the longs that are liquidating. So now it's the people that have been buying in here that are starting to change their mind and get squeezed out of the trade. Very interesting. Okay, so just like earlier in the B period when we pushed above the halfback and we didn't get any short covering up there, we got very little liquidation below the opening price. So that is the market telling us it needs more of this chop. It needs more of that two-sided trade. It needs to bring in more longs and more shorts. It's not enough to squeeze them to break out of here. So now we're back to assuming that was support and looking for resistance. Do they turn this node at 44.06 into resistance to head back down and test the lows? Or halfback? Or are they able to push back through and get back above halfback again? This is a chop zone. Gap and chop, baby. GT says, can you give a brief description of what is on your footprint chart? I assume you mean the market profile chart. In which case, yes, I absolutely can. All right. So basically what you are looking at here on this chart over here on the left is the ES, and it's split out into 30-minute time periods. So each one of these letters that you see is like a 30-minute candlestick. And I've got two profiles. Sorry, I got to move my levels here. I've got two profiles right next to each other. So this is one profile right here. And then this is one right here. And it's the exact same thing. They're both just the current market right now, trading from the open this morning until the current moment. But what will be different about them that you'll be able to see in the C period is that the ones that are on the right are expanded out so that you can see each 30-minute period on its own. But the ones on the left are going to be collapsed over top of each other so that you can see them like this. And the reason that we want to see that is that allows us to see the areas where the market spends the most time. So basically where you see a chunk of letters all in the same place, that's an area where the market spent a lot of time. Okay. Then I also have volume profiles. So there's two of those as well for the current session. The one over here on the left is the volume profile for the entire day so far. And then the one in the middle here, that's for the current 30-minute time period. Okay. So just like the TPOs, the letters tell me where the market spends the most time, the volume profiles tell me where it brings in the most volume. So far today, we've brought in the most volume in here. And within the last 30 minutes, we've brought in the most volume up here. But throughout the day today, we've actually brought in a decent amount of volume up here, but not in the last 30 minutes. So what do I notice? Well, as time is passing, as we're moving further along in the day, the volume is going lower and lower and lower. So all I'm basically doing all day, every day, is looking at this chart the same way somebody would look at a candlestick chart, but I just get more information from it. I don't just know where price is. I know where price is, how much time it's spending there, how much volume it's bringing in, where is it reversing, so on and so forth. That's the advantage of the market profile. And then obviously the different in color differentiations here. So the light blue is the overnight sessions. So this area here was from the close yesterday to the open this morning. And then the purple ones are the regular trading hours during the day. And I separate those out from each other as well. Truman says, how can you tell they are liquidation sellers versus non-retail sellers? It's not a matter of retail versus institutional. And it's not an exact science. So when I say, oh, that's a liquidation or that's short covering, it doesn't necessarily mean every single person buying or selling at that moment happens to be a short-term trader who's getting squeezed. It's not. It's just a way, it's a framework to look at the market, right? Instead of just staring at a chart all day and having no clue what is it doing, I'm giving myself a framework to understand what the market is doing. Now, always, at any moment, there's going to be all sorts of different participants doing all sorts of different things. I can't possibly know who is doing what always. But looking at it as a two-way auction process, choosing to look at it as, in this moment, are there more buyers or sellers? And if there are, what will happen next will give me a framework that will be right more often than it is wrong, and so I can profit from it. I don't ever know when I see a thing happen in the market who actually did it or why. But what I do know is what I just saw and what seeing that thing means is likely to come next. I really don't get worried with the why or the who, just the what. Scott says, we're still at only 80 likes. The fuck? That's all right. I have nothing to change the banner to anyway. We're in a chop zone. Chopping it up. Okay, so the same way that I talked about the box earlier, where I said we were inside a box, and as long as we were in there and we were chopping back and forth, whichever way we broke, we were likely to get some excess. I would describe what's happening now as the same thing, only the box is a little bit bigger. It now includes that entire B period. So I think whichever of the B period high or low we break first, that is likely to give us some momentum. Same as I've been saying all morning, if it's two-sided trade, eventually half of them have to be wrong and get squeezed. So I think if we break the B period high, That squeeze will be to the upside. And if we break the B period low, it'll be to the gap fill to the downside. And we're probably going to keep grinding in between until we can get that break. This is what happens when the participants are in disagreement. Half of them think it's going to go up and half think it's going to go down. They just keep playing tug of war until one side finally gives up. ASL. ASL says, do members get Jim Dalton's cell phone? I'm not Jim Dalton. I'm a different human. No correlation. But if you have Dalton's number, I mean, I'm not saying I wouldn't take it. Oh, so choppy. So choppy. They chop it up and they just grind. Both markets chopping it up here. ES creating a very, very weak high right at that B period high. So once again, if they break it, I am bullish to head up and test the overnight high as that, winding up of the spring effect. And if they don't, if they turn and head back down, well, then I won't be surprised at all because it will have just been to make that spring tighter. Kite attack. Kite attack. Kite attack. Kite attack says NQ levels did not prevent me from blowing up my account last week, but it was very helpful, especially when the ES is kind of choppy. I will say, for what it's worth, for those traders out there who are still blowing up accounts, it doesn't matter what technical tools you use to choose, how to see the market, whether you use price action on multiple indices next to each other, or you use a certain indicator or whatever. That's not what matters. That's not what leads to blowing up. What leads to blowing up is not managing your risk, right? So whatever's telling you to get long or short right now at this particular moment, that's not what matters. What matters is how much of a position size you choose to take in this moment compared to how much of your total account size does that represent, right? As long as you're only risking a tiny little bit of your account every trade you take, you should never blow yourself up. Because before you have enough losses in a row to blow yourself up, you will learn the lesson that your technical signal doesn't work and stop using it. So just a little caveat to all the traders out there who are still blowing up accounts. That has nothing to do with your TA and everything to do with your risk management. And I spent years and years and years trading, not understanding that. Will R.L. says, what does an inside TPO mean? It just means uncertainty. So the C period being inside the what is the A and B period range is just more chop, right? It's that winding up that I've been talking about, making that spring tighter and tighter and tighter, pulling that rubber band back more and more and more. The market hasn't decided yet who's going to win. Could be the buyers, could be the sellers. So it's just going to keep going up, and it's going to go down in this range again and again and again until enough of them are in to squeeze. And ours is not to try to guess when it'll break, but only know what to do when it does. ASL says, don't give my strategy only one chance to prove itself by going all in. I mean, you might get lucky, but you can't count on that for the rest of your life. That's the problem. Too many people, they take a gamble, one big swing, and they get lucky and they win a bunch of money. And they go around and they tell all their friends, hey, I know how to make money. Listen to me. You just take a big swing, and sometimes you lose, and that's fine. And you just go back to your job, and you make more money, and then you try again later. Nope. No. Better to just learn first, become a master, have a system that guarantees to work, then risk money. Because that will actually create results that can be repeated. In my humble opinion. All right, what do we think? Another iceberg, another flip in reverse right at the B period high? Or are we about to break on through to the other side? ASL says the key is to have 200 strategies. Again, not my way. I have about 8 strategies. And I just use those same 8 again and again and again every day without fail. I got a strategy for gap and go. I got a strategy for gap fill. I got a strategy for backfilling single prints and a strategy for finding support at the base of them. I've got a strategy for rotation and a strategy for trend. I've got a strategy for a look above that fails or a look above that finds support and continuation. The rest of the time, I just wait until one of those present themselves as an opportunity. Trade hard. If you have no edge, one trade all in is the way to go. No, you're right. You're right. If you're in Las Vegas and you got to make a bet, because, I mean, you got to make a bet. You're in Las Vegas. Well, of course, you go all in on black or red and you just pucker those butt cheeks up real tight and hope. 48.7425 chance of success. Esco says, for me, TA, market profile, etc., is part of my confidence in the potential trade, which results in an appropriate position size. But the risk management with best possible entrance, that is how I used to approach, and I do not anymore. Now I just always take every trade with the same position size no matter what. Because I've found that is easier to manage my emotions, but I used to trade like that. More confidence it'll succeed, larger position. Okay, so here's where it gets tricky. I am now bullish to head up and test that overnight high at 44.15, but I am not bullish beyond that. So far, everything I'm seeing feels like it's going to be a sideways day. Like we may just have to chop it up until FOMC tomorrow. So the only thing that will truly get me green banner bullish is new buyers up here above that overnight high. Otherwise, I suspect we get up there, run out, and come right back down towards the halfback. If you think about it, let's say the market wanted to put itself in an extremely, precarious position for a Wednesday when there was going to be an FOMC meeting. And the market knew that there was going to be a F ton of speculators speculating as to the result of the FOMC, right? Whatever comes out tomorrow is going to have a huge effect for months to come on the consequences of the market. So people who are buying and selling assets and trying to recognize how should they hedge themselves for that are deathly afraid of what could happen tomorrow. Do they raise interest rates? Do they not? How does the market react? No, depending on what they do. The market could react either way. So everybody's got so much uncertainty. What are they going to do? They're going to insure themselves. They're going to make some sort of speculative bet to kind of hedge their position going into the FOMC. So just imagine you got a whole market full of people that are desperate for something crazy to happen tomorrow. Where would you want to be positioned from a TA standpoint for that to happen? You know, it would look like a great spot for me. Right, cha. Right? Right, cha. You still have momentum on the daily. So you still have all the reason in the world for the bulls to keep buying. But you also have an amazing opportunity for the market to pull behind, to pull back and backfill the weakness left. You also will have tons of speculators that are going to get squeezed purely based on time, right? Because tons of people were thinking the market was going to go sideways yesterday and today. And so now they're all screwed because we made this big move first and then started going sideways. So by just spending the rest of the day today kind of floating around this area where we currently are, they could set us up to open tomorrow in a beautiful position for a big move one way or the other. Right at the moment when a fundamental catalyst takes place for a big move one way or to other. So that is an argument for the market to just go sideways the rest of the day today. To me, that is the highest probability, unless the exception being one of two things. One, we push above the overnight high and we find new business there. Okay. Great. Then we still have momentum. We can keep it going. I'm happy to become a bull up there. Or we pull down and we fill the gap we left behind from yesterday, and we do not find support there, and we start to head into yesterday's range. Well, then great. I can be a bear down there. But my guess is we're about to spend the rest of the day just chopping up here. Just driving everyone mad, purely in preparation for that bigger break that's going to happen tomorrow. So I suspect today will be rotational AF inside the initial balance, which is about as hard a day as you can get to trade. Gap and chop inside the initial balance. It is nothing but a gamble until we get new information. Garrett says, do you stop or do you scale out? Sometimes, but not generally. Sometimes I have a runner. So like, let's say, hypothetically, the market pushed up and it got support up here above the overnight high. Okay. So I'm seeing that support and I'm thinking I want to get long there. So I would say buy 3 contracts right there with a stop right here. And I'd put my take profit on the first 2 up here, but I wouldn't put a take profit for the third. So I'd get into my trade. The market would start moving my direction. When it got there and it filled the take profit on the first 2 contracts, I would move my stop above my entry on the third and then just hold it and just see how far it can go. That's about as close to scaling as I would do. Truman, when a stock is at a new high, the stock is spending a lot of time chopping up, bringing volume. How can you tell that it is bringing in new buyers versus bringing in new sellers? Because if they brought in new sellers, the price would go down, right? So the price is in one location, it's here, and the market comes in and it pushes and it pushes and it pushes to a new location. And now they're beginning to chop it up in that new location. If sellers stepped in there, the market would go down. So the fact that the market goes nowhere means one of 2 things is happening. Either no one's doing any business at all, or there's more buyers stepping in than sellers. If there's more buyers up here, they're new buyers. They're not buyers from down here. Those buyers already have their position. They're either going to take profits or stay in. So they would be new buyers up there. So it's a very simple concept. The market is always doing price exploration. It's in a spot, it's going to a new spot. Once it gets to that new spot, it finds out what happens there. Gets to the new spot. Is it going to keep going to another new spot? Or does it need to head back down to that previous spot? That's really all I'm doing all day, every day, is watching those support or resistance areas. Where does the market spend the most time? Where does it bring in the most volume? What happens when it gets back there again? So today is an example where most of the time and most of the volume so far today is being brought in above where the time and the volume was from the overnight. So that's bullish to see. That's new buyers buying up here. Okay. But when they try to get above the area of the overnight range, look at that. Very little volume, very little time was spent up there. So what does that tell us? It tells us we have enough new buyers to keep the market up here. We push to the new location. We have enough to stay, but we don't have enough to keep going. Not yet. But we have enough to stay, which means there are not sellers piling on up here. It's just two-sided trade. Which is a chop zone. And they chop it up. Does that make sense? So when we've got these levels that we look at that we think are important, the market's here, it's got to go to here, and then it's got to go to here. Okay? If it's clearly breaking away from one of those levels and heading towards the next, that's momentum. So we focus on, can it get to that next spot? But if it's at one of those locations and it's not going either way, it's chop. So what I'm saying is inside today's initial balance, it's chop. It's in one of these zones waiting to break to the next one. And it makes sense, man. It got here awfully quick. We were literally down here yesterday at the open. 24 hours ago, we were all the way down here. So they pushed up to a new level, and now they're doing that chop at that new level. It makes sense. Excess leads to balance. Speaking of excess, can we get 4 brave souls to smash that like button, breaking those triple digits, crowning us all kings? Jay says, so it seems like you're a big TNA man. Yeah, technical analysis. We're saying technical analysis, right? I mean, I also like the other thing. Frito, turkey legs for all. I can actually go for a turkey leg right now. Trade Hard says, too detailed of an explanation. I just use a magic 8-ball. I did too. Make no mistake. I spent years thinking I was trading when really I was just guessing. Just doing a lot of guessing. Kite Attack, how and where do I stream? I stream through YouTube. And I just send out an email every day with the link. All you gotta do is join the brigade. $10 a month, baby. I'm gonna go live here this week, all week on the YouTube though. Right where you are right now. So just subscribe to the channel and you'll get it free for a week. Hopefully something will actually happen. No, tomorrow should be good. Tomorrow will be a very boring morning, but should be a very exciting afternoon. And we'll do it together here on the public stream. Our RK says, kind of wish Jay Powell would shock us with a 0.5 point raise just to shake up the macro tards. Dude, you got to give them a little leeway. There's never been a time harder to be a macro person than right now. I mean, these markets just don't make any sense. Kite Attack, I was considering subscribing. You should. It's $10. What do you got to lose? If at the end of the month you feel like it was a waste of $10, you just cancel. Small price to pay. I don't even know what this is. Short sale volume. The answer is nope, not for me. Kite says, if you can prevent me from revenge trading, it's a deal. Well, I can't prevent you, but here's what I can do, Kite. If you're willing to publicly talk about your trades, if you're willing to admit when you make a mistake, when you revenge trade, and jump in the chat and explain to me what's going on, I will be happy to be the authority figure that puts you in your place and tells you, hey, get your shit together. Don't do that again. Because sometimes we all need that. Another classic sign of a potential rotational day. Since the B period low, the market has been building momentum with price to the upside. Meanwhile, the ticks are building momentum to the downside. Also, the ticks are building momentum to the downside, while the other two internals, the breadth and the advancers versus decliners, are essentially building momentum to the upside. Advancers versus decliners being going sideways at higher prices. And so all of that is often what happens when you're going to have a very choppy day. There are signals not to trust the momentum in price. Scott, better yet, set some rules in the software, and when you break them, have it shock you with a dog shock collar. We've talked about that before. I think it will happen. I think that day will come. Like, I was thinking about this the other day when I was watching Apple's new Vision Pro ad that they made. And I was thinking to myself, obviously that's going to be the future for traders, right? Everybody's just going to be sitting on their couch with their goggles on, because you can literally go movie theater size screen visually. So it's like you could have as many charts as you want. They could be 3-dimensional. So you could literally walk around inside the charts and view the data in any possible way. You'll also be able to interact with an AI to help you with your trade decisions. So you could say to the AI, I want to get long, but don't let me FOMO, whatever. So anyway, I was just thinking, man, with these Apple Pro headsets, they will be able to track, because it can track your eye movements and your hand movements and all of your, physical movements so well. It will also be able to track your heart rate and everything else. It will know when you're feeling emotional. And so if you give an order, buy the market, sell the market, whatever, and the headset predicts that you are feeling emotional in this moment, that this is a FOMO trade or this is a chase or whatever, it can choose to block that trade. It can only let you take trades when they are trades where you are calm and focused and all your criteria is met. I mean, anyway, I was just thinking about how absolutely fascinating trading is going to become in the next few years. Once we can start to compute data like physical data from our body in real time with computers, when it can sense every little twitch of every muscle fiber, all the sweat, all the heartbeats, all the everything, when it can sense everything about what's going on with you, it can tell you when you're having a problem psychologically or not. It can tell you when to trust your instincts and when to not. So I think it's going to be pretty cool. All right. So we're finally getting up to that overnight high. Now the question becomes, is there anyone new who wants to do business up here? So the way that will look, price will first push above the overnight high. It'll come back down and it'll start creating support in here. And then those ticks will work their way back above the zero line and they'll start to stay above that zero line. They too will find support. If I see both of those things, if I see support in price above 44.15 and I see the ticks holding the zero line, then I can begin to get bullish. Otherwise, my assumption is we're about to look above and then pull right back down to the POC. Okay? So right now I'm more neutral. But if I get those buyers, I'll change my mind. Jay, that must be some good weed. No, that's my brain. My brain works normal like everyone else does when they get high. All right, well, finally some short covering. Finally, someone's getting squeezed. So again, it doesn't matter until we get that support. They've got to confirm it now. We've got to see those new buyers hold that zero line to trust it. Esco and Neuralink can help autocorrect your bad trading habits. Yeah, that's what I'm saying. That's the next step. First, it'll just be headsets. Then it'll be plugging directly into the computer. Will, can I take a look at the queue? I most certainly can. Okay, so NQ is now not a very good one, but it is technically a gap and go. So they created a gap. They filled that gap, but then they spent very little time and brought in very little volume inside yesterday's range. So that is bullish to see that they have momentum. I would say for now, though, it's same as the ES, just momentum inside the A period, inside the initial balance. But if they can break the A period high, you would then definitely look to test the overnight high and monitor for continuation higher from there. So if they can get up to 15,126, do they find support? If so, look to test 15,156 and then same thing there for continuation. But yeah, otherwise NQ looks rotational to me. Higher probability, just going sideways. Actually, since you haven't broke the initial balance, let's say they'll try. They'll poke up, test that overnight high, then come back and start going sideways. Wanted says, do you use buy market orders to get into positions? Sometimes. It really just depends. There are times where a setup that I'm going to trade is one I can plan for ahead of time. So I can say, if the market pulls back to the overnight high and finds support, I want to be long. So I can choose, would I rather put in a limit order and just have it automatically fill so I'm in my position? Or would I rather wait and see what happens? Do we get support? And then if I visually see it, then I hit the market buy button. And it's literally different case by case basis. On days where I have confidence, I'm pretty sure it's going to fill. I just go ahead and throw a limit in. When I have less confidence, I wait and watch, and then I jump in at market. If I could be a perfect trader, I would always enter at limit. But sometimes psychologically, I just don't have enough faith in the moment to put in the limit order. But then once I see the support, I know what's coming next. I know we got, a 10-point move higher. I'm okay with giving up a point or so to be sure first and then getting in at market. So now what are we observing when we look at the volume profile in just the current 30-minute time period? That is the D period. We can see we brought in a little bit of volume down here, right around the point of control, where we were having all that two-sided trade, where we spent all this time this morning. But then as soon as we made that break and made that move up above the overnight high, we have been bringing in all the volume up here. So that tells us with the ticks above the zero line and seeing the volume that we do have new buyers stepping up here. So that is bullish to see and increases the odds they should be able to hold this overnight high, 44.15, and look to break the initial balance to the upside at 44.21. Once they break that initial balance to the upside, they are officially trending higher. And as long as they can continue to keep bringing in those new buyers, as they just did, they can keep that momentum going. So this is bullish to see. And there you go. They are now one time framing. So if I'm being totally honest, this is probably about the least exciting trend moment I've ever seen. I'm not necessarily thinking we have to go to the moon, but we do have a lot of shorts that need to cover, right? All that two-sided trade. Now all those traders got to get squeezed. So I think stick with it as long as it continues to one time frame. If you wanted to be super conservative, you could say, as long as it stays above the overnight high. So bullish as long as we're above that overnight high and bringing in new buyers. And then once we print the E period, anything above that D period low is bullish for continuation. Garrett says, is this a double TPO high on ES? No, it is not. It's a good high. Good excess. Good taper. Okay, so now as we print the E period, we can see on the chart when the momentum is over for sure if that E period dips below the D period low by 2 ticks. Okay, that's half a point. So as long as we stay within this D period range, the higher probability is that we will turn around and head right back up. But if we dip below that D period low, it's the market telling us we're done going up. We got everyone that's possibly going to go long to go long. We squeezed every short we could possibly squeeze, and now we're going to go back to a two-sided market. But as long as we remain above there, the buyers are in control, and the slow melt to the upside will continue. We call that level cessation of the trend, the end of the trend. Kite asks, is your TPO set up on 30-minute periods? The answer is yep. "30-minute TPOs. My profile is from 9:30 a.m. to 4 p.m. And then my overnight profile is 4 p.m. to 9:30 a.m. You can see now what I was talking about earlier with the way the TPOs are built. So the one on the left, it shows me the collapsed TPOs, so where the time was spent. And the one on the right allows me to look at them more like candlesticks and see where the price was in that time. All right, no support at the overnight high. So we're looking to pull back down towards 41.11, looking for support there. So once again, if this was really a strong trend that was going to keep going, they should have been able to keep those ticks above the zero line. If you recall, it's what I talked about. They would have to get price above the overnight high. They would have to bring in those buyers to hold the overnight high, and they'd have to keep those ticks going. So this now tells us that we're probably not going to keep going today. Okay? Now, we still assume that they can keep it going as long as we're above the point of cessation. So what does that mean? It means I do not want to be trying to go short the market right now. That would be a terrible idea. I'd be fighting the momentum. But it just means I'm not as eager to jump into a long unless I can get into one with very, very little risk. Okay? So the buyers are still in charge, but this is telling us they're not doing a very good job of it. And so we may get cessation when we come down. It's beginning to look a lot like sideways all the damn day long. Waiting for that FOMC to see what the future brings. We just chop it up. Wanted says, can I explain the other charts? I surely can. So the charts that you see in the background on Thinkorswim, these are the internals. It's something I learned from Peter Resnicek at Shadow Trader. Basically, the one over here on the left, this is the SPX and the NDX. And I've got them set up on 15-minute candles. The reason I look at the SPX and the NDX is as a alternative for the S&P 500 and the Nasdaq. So basically, because they only trade in the regular trading hours, you could use the futures contracts, but then you would have to exclude the overnight and only use the regular trading hours. Now, the reason is because if you put a simple 20 moving average on the 15-minute candles, only including the regular trading hours, it really does have to be that magical combination. It has to be a simple moving average. It can't be exponential, and it has to be just the regular trading hours, and it has to be the 15-minute time period. But if you do all those things, then the trend line, the 20 moving average, can act as very good support or resistance intraday. So when the market is working its way to that trend line, it will often reverse there and head back up. Also, if it is working as support, it will often continue to work as support. And if it is working as support and it breaks, that almost certainly tells you that momentum is over and the market's going to go the other way. So that 20 moving average is very helpful. Over here in the top middle, I have the breadth of the market. And then to the right of that, I have the advancers versus decliners. These basically just give us a signal of momentum, sort of a little bit of a slower zoomed out look at momentum. So are there more buyers or sellers in the market at that particular time? And then the ticks do the same thing, but it's on a much faster time frame. So the ticks are really telling us second by second throughout the day, is there more buyers or sellers? So at this exact moment right now, if you're below the zero, there are more sellers. And if you're above, there are more buyers. But it doesn't necessarily mean there's any kind of pattern. It's just what's happening right now at this moment. Whereas the top two kind of show you more of a pattern. The last thing I look at is the Bookmap, which is this chart over here on the right. What this basically does is shows me the difference between where the liquidity is in the books and then like beforehand and then once the market gets there. So if you look over here on the white line that you see running up and down the screen right here, everything on the right of that is the current order books. So this is what's waiting to fill. And then everything to the left over here, this is what actually filled. So this is where the volume, where the liquidity was waiting at that actual moment. So the way that I use that is by comparing the changes between the two. So when I'm looking at the market right now, where is the liquidity? Okay, there's liquidity right here. Sorry, let me change colors. There's liquidity right here. There's liquidity right here. There's liquidity right here. Okay, so then what happens as the market gets closer to it? If we turn around and we start heading back up, does this liquidity disappear or does it stay there? That gives me insights as to what games are being played. So as the market was working its way down to this liquidity down here, what were they doing? Well, they had liquidity up here, but the moment it filled, they disappeared it. So we know this wasn't real buyers. It was just part of whatever this mechanism was. So I'm just constantly always looking for, is this real new buyers or is it some sort of mechanical, system that's just pushing the market up to bring it back down? I can tell based on what happens with the liquidity. And then the last thing I'm looking at is the stops and icebergs setting on the Bookmap, which is just these little numbers with the symbols next to them. If it's a circle, that's a stop. If it's two little triangles, that's a iceberg. Stops are basically just people who are getting stopped out of their position. They were already long and they got stopped out. Okay. Whereas icebergs are new positions being filled. They're getting themselves long. And I use those just as an indication to understand if there's a very large participant playing, where are they playing, what are they doing? And then also just to recognize, is what's happening right now in this moment all bots? Is it all computers? Or is it real traders trading? When it's real traders, there'll be way, way fewer of these icebergs. Trade Hard says stops could also be people entering a stop order. I don't believe so. I think the software is set up to filter those out. But even if that's true, that's fine. It's the same thing. The point is, did somebody want to get long or short at this level? And the ADSPD is the advancers versus decliners for just the S&P 500. Garrett says, which one helps better trading, TPO or Bookmap? That's not a... You're asking the wrong question. So every single instrument that exists for trading markets exists because it worked for someone, right? If you invented a new piece of software or a new whatever, no one would ever want to use it or buy it from you if it didn't work. So as an individual trader, what I encourage you to do is release yourself from the idea that there is a right or a wrong anything. Okay? No one piece of software, no one signal, no one service is any better than any other, or more reliable, or more effective, or anything like that. They're all showing you the same data. Whether you're looking at market profile or you're looking at candlesticks, whether you're looking at the VWAP or the moving average or the Bollinger Bands or the Ikemudu cloud or whatever it is that you use, or Fibonacci or da-da-da. They are all just taking the same information and just showing it to you in different formats, in different ways. So there's no right or wrong, and there's no one better than the other. However, they are all different. They all work differently and they function differently. So what is important is for you to figure out which tool is right for you. Some people might find that market profile is way more valuable for their approach to markets than Bookmap. And some might find the opposite, right? But as long as you keep thinking that there is a right or wrong, that you might be using the wrong one, you'll continue to chase, right? You'll always be looking for what's the new instrument, what's the new thing, and then you'll never actually be successful. The way you actually be successful is by picking one of your choice, and then just becoming an expert at it. Just become the best trader on planet Earth at trading whatever that one is. Whether it's VWAP or it's Bollinger Bands or it's a moving average or it's whatever. Like, you pick whichever one you want and you just become a killer at trading that one indicator. That's how you be successful. So in the question of which is better between Bookmap or market profile, because I have spent excessively more time on market profile and I had a mentor with years and years of experience with market profile to teach me that, and I did not with Bookmap, for me, market profile is a much more important part of my strategy. But that is not me saying market profile is better in any way, shape, or form. It's just, for me, it works better. Kite says, would you qualify yourself as a momentum trader? Then when to exit position on level or order flow chart? So the type of trader that I am is a discretionary trader. So I trade everything. I can trade a trend, like you say, a momentum trader. I can be a momentum trader. I have systems for trading trend and trading momentum. I can also be a trader who trades balance. I have systems for trading balance. I have systems for trading when the market is highly volatile and systems for trading when it's not. What my skill as a trader is knowing which of my systems to deploy at which times. Which times is it worth getting in the trade and which times is it worth letting the trade go? Know when to hold them, know when to fold them. That's what my skill is. So I'm not any one kind of trader. My skill is in knowing when to take trades and when not to. And the skill is in basically choosing to not take trades unless I am sure. I would rather take one trade in a week and have it be profitable than take 10 trades a day every day and at the end of the week be break even. Does that make sense? So it's just about being a sniper and waiting for that one perfect, beautiful, great opportunity. That opportunity might be a trend. That opportunity might be a rotation. That opportunity might come to me in a second, and I literally didn't see it 5 seconds ago, and now I'm seeing it, and I got to just jump in at market. Or I might have been sitting here waiting for 3 fucking hours for the market to grind to my level and fill my order. It's different every day. What is the market doing that day? What opportunities is it giving me? I just do my best to take advantage of whatever I get. Okay, so this is the third time today they've gotten the market above that overnight high. Both previous times, they were able to push the ticks above the zero, but they were not able to keep them above the zero. So the question is, can they do it now? Can they get those ticks above the zero and keep them? If not, I suspect we're going to get cessation in the F period. So, okay, now in the E period, what has changed from the D period? Looking at the volume profile for the 30-minute volume. In the D period, when we pushed up in here, we brought in lots of volume up in here. We had that big old node. Well, now some time has passed. We're in the E period, and where are we bringing in most of that volume? Down here. So now when we look at our volume profile for the day today, we're noticing that it's getting thin up here above the overnight high. Spending less and less time. Less and less volume. That is a sign we are running out of momentum. Increasing the odds we'll get cessation. Beautiful. Right back at the halfback, right at the TPO change. It's now or never. Do we go sideways? Boom. Okay. So now, right there, cessation. So that is the end of the trend, the end of the momentum. Increasing the odds, the market is just going to go sideways the rest of the day. So it is as I suspected. They tried to take the market higher, and they couldn't do it. So now the highest probability is that the market will just go sideways inside today's range and just chop around up here. However, if we break through this node down here at 43.96 that you see from the overnight, then we are looking to fill that gap. It would not be unreasonable to me for the market to spend a few hours here just chopping sideways, and then at the very end of the day having a liquidation to go down and fill the gap. Now, what does that mean? Does that mean you should be shorting right now to go fill the gap? Absolutely not, right? A liquidation isn't something you can predict. It either happens or it doesn't. But if the market were to liquidate, it just wouldn't get me bearish because I would assume they're just going down to fill that gap, right? So in this area, I will be looking to be a buyer for rotation back up to the POC. But if they liquidate, well, then I'm not going to panic and start selling. I'll let them liquidate down and fill that gap and assume it's coming up after that. Okay? In my mind, bigger picture, what the market is doing is it is going to just stay where it is in this general area for the rest of today and into the overnight so that it can open tomorrow, as we pointed out on the daily, right at the top of this trend. A perfect location for the FOMC to cause a huge break one way or to other. So I just think where we are right now is such a great place to be come 2 o'clock tomorrow. So why not just spend the rest of the day grinding around? Makes sense to me. With that, I will say goodbye. Does anyone have any final questions for me before the close today? So once again, I think we're going sideways. I think we're going to go down, come back up, come back down, go down, come back up, go up, come back down. Again and again and again, returning to this 44.10 area. And only if we break below 97 am I looking to fill that gap. Final question. Speak now or forever hold your peace. Trade Hard says the meaning of life? Be in the now, my friend. That's all it is. Don't think about the past. Don't worry about the future. Just live each moment as if it's your last. That's all it's about. Later, dude, says Dylan. Adios to you, Andrew and RK. Where can we buy cool pirate merch again? PirateTraders.io. GT, what's the streaming schedule? I'll be right back here tomorrow morning at 9:30 a.m. I hope to see you then.